Active Investor here, bringing you another independent analysis. This time we're taking a look at Tesla Motors. The chart we have today is a one-day chart, each candlestick on this chart representing 1 day of trading. So we go back a few months, right around the middle of February on this chart, but really I want to just pay attention to the last few candles that we have on this chart. So we have two main areas to take a look at, $265 and $215. And before we really get into the nitty-gritty technicals, I would just like to give a shout out to Brecht VDV for asking me to perform this analysis. I do like Tesla. It's got a really nice looking chart, and it's fun to give technical analysis on charts like this that have swings and good volume. So thank you for asking me to do this. I am enjoying this analysis very much, and I hope you viewers are enjoying it as well. So with all that out of the way, let's get right to the nitty-gritty details. So we have a rough head and shoulders pattern, as you guys can see. We have the left shoulder, the head, and what could be considered the right shoulder over here. Now, head and shoulders patterns are known for being either very vague, some of them are perfect, but most of them are sloppy. And the pattern that we have here is definitely a sloppy head and shoulders. It's not clean, We have the left shoulder and the head way over here, and then we basically correlated for a bit before making this right shoulder. So it's a very sloppy head and shoulders pattern, but you could indeed call it a head and shoulders pattern. And keeping in line with that theme, this $215 pivot point could be considered the neckline, where we have our lows on the left shoulder and our lows of the right shoulder. So the next area to take a look at would be $265, and that's the top. And this analysis, I'm going to be saying that there's a potential swing trade here. You could maybe get in around $215 and look for a sale at about $265. Now, for the short term, I'm thinking that Tesla will dip to this neckline at 215, but there's a chance we bounce off. Why am I saying that it might dip there? Well, a few reasons. One of the main reasons is the fact that this yellow line is our 50-period moving average, and that's above our candles. We never want to see that above our candles if we're bullish on a stock, if we're going long on it. We want that to be below our candles. So the good news is the 10 and 20 simple moving averages are below our candles indeed, so those can act as trailing support. Incidentally enough, both those moving averages are pretty much right in line with that $215 pivot point slash neckline, so it's indicating that we do indeed have really good support at $215. If it does dip to 215, it's trading right now at about 218, there's a good chance it will bounce off. Now we want to see this 50-period moving average work its way down while our 10 and 20 period moving averages work their way above that 50 period moving average, and our candles are above all of that. That would be the most ideal situation. Of course, there's another indicator to take a look at down here at the bottom. That's our RSI slash relative strength index. Now, the issue with the RSI is that we have broken the 80 line, and that's a bearish sign. We want to stay overbought. When we're overbought on the longer time frames, that's when we can see that the trend's up and we can see a run. For example, right here, you can see that actually, let me make that a little cleaner. When we went overbought to where we ended overbought, that's when we saw that price run all the way up. Now, inversely, when we went oversold, that's when we saw our price drop a lot. So we want to stay overbought. We want this RSI to be above the 80 line. Right now, it's in no man's land, so that's pretty bad. But what I'm thinking is going to happen is Tesla dips down a little bit more. It tests $215. As that happens, our relative strength index should hit the 20 line, and as our candles bounce off support, our 20 line will inch its way back to become above the 80 line once again. That's going to be the most ideal situation. I don't really see Tesla spiking up from here before it dips to $215. I think it's pretty much guaranteed that it'll dip to $215, and I'm thinking it'll definitely bounce off. And as that does happen, of course, as I mentioned, the relative strength index should bounce off the 20 line as well. Now, if that does happen, it's not smooth sailing to 265. Keep in mind, this 50-period moving average is in the way. We're going to need to break this because it can act as trailing resistance. But aside from that 50-period moving average, the sailing is pretty smooth up to 265. So you could look for a potential swing trade getting in at 215, setting a really tight stop, maybe at about 205 or so. When we had the lows here, it was right about $208. So if you have a stop at about $205, you're really limiting your downside while maximizing your upside. And that's really the goal of every day trader. That's what we want to do, limit our downside and maximize our upside. So getting in at 215, looking for a swing trade at 265 is a pretty nice trade. You have a lot of potential profit there, and your loss, if you keep that stop loss, is pretty small, pretty minimal. So that could be a really good play. However, if $215 breaks, then things are going to be looking a lot worse, because when that neckline breaks, that's when we can see a bearish reversal. So, if our relative strength index was breaking the 80 line, which it is now, and our candles were breaking that neckline, I would flat out tell you I'm bearish on Tesla. It's not looking good at all. But the fact is that we're still above the neckline, and our RSI did break the 80 line, but we're still above the neckline. So there's a really good chance it bounced off that support and continues working its way up. So that's why I'm still pretty bullish on Tesla for now. I think there's a good chance we swing at 265. I don't think 265 breaks, though. There is some really heavy historical resistance there at 265. So I would say if you do swing trade, take your profits off the table at 265 just to be safe. If it does break above 265 and turn it to support, you can look for an entrance at that area for another swing trade. But why risk your profits? Why risk getting denied and falling down and risking your profits when you can just sell up here and look for another swing trade in the next channel? That's what I recommend doing. And that's really all I have to say about Tesla for now. We've pretty much covered everything. So Brecht VDV, thank you for recommending me to perform this analysis. I once again had a lot of fun. I like looking at the Tesla chart, so I appreciate that, man. I hope that this analysis helped you guys out. Any questions, leave some feedback below. I'll take a look, and I'll catch you in the next video. Have a good one. Take care.